Welcome to Simple Investing Secrets. In this video, we're going to talk about the top 10 best growth stocks to buy and hold forever. Before starting, please do like this video and subscribe to the channel for future updates. Number 10, the Alphabet. Some people might believe that there is a clear and present threat to Alphabet's company. GOOG minus 1.89%, GOOGL minus 1.94%. TikTok is a potent rival to YouTube in the market of video apps. The most significant division of Google could be in danger from OpenAI's ChatGPT AI technology. What makes Alphabet a stock to buy now and hold forever then? The claims that the corporation is going out of business are vastly overblown. Each month, more than 1.5 billion people watch YouTube Shorts, Alphabet's response to TikTok. The business has also a proprietary artificial intelligence AI chatbot that has not yet been made public and may be better than ChatGPT. The truth is that Alphabet continues to be a money generator with dominant positions across a number of markets. It won't be simple to overthrow the corporation. It's intriguing to speculate about how a newcomer might upset Alphabet's operations. The tech titan will probably continue to make investors richer for more years to come, though. Number 9. Brookfield Renewable. It is not necessary to think that fossil fuels will vanish overnight to realize that the use of renewable energy will rise substantially in the next few years. For Brookfield Renewable, this trend is encouraging. BEP 1.04%, BEPC minus 1.81%. A total of 24 gigawatts of hydroelectric wind, solar, and distributed energy plants are operated by Brookfield Renewable. The company's pipeline of future projects may more than treble that sum. Of course, Brookfield Renewable will need some time to produce that much renewable energy. Nonetheless, over the long run, investors should be able to anticipate sustained total returns of between 12 and 15% annually. That alone makes buying and holding this stock a no-brainer. Number 8, Mercado Libre. Digital payments and e-commerce are two trends that should create money for investors for decades to come. The outstanding stock, Mercado Libre, MELI 1.81%, stands out for enabling you to benefit from both movements. For many years, the business has dominated Latin America's e-commerce market. Through its Mercado Pago platform, Mercado Libre has also entered the field of electronic payments. For Mercado Libre, both areas offer a ton of room for expansion. According to Morgan Stanley, Latin America's e-commerce penetration rate could rise by 45% in the following 3 years. The region is also the world's hottest fintech market. Number 7, Vertex Pharmaceuticals. The inclusion of a biotech stock on a list of investments to make now and hold forever may surprise you. Vertex Pharmaceuticals, VRTX minus 1.78%, isn't your typical biotech stock, though. When it comes to addressing the fundamental cause of cystic fibrosis, the corporation has a monopoly, CF. Now, over 65% of the estimated 88,000 CF patients globally are being treated with its 4 approved CF medicines. Vertex should be able to raise the percentage to about 95% with more reimbursement agreements and approvals for younger age groups. The pharmaceutical company is also putting a messenger RNA treatment, which may be used to treat the remaining CF sufferers through clinical trials this year. Yet Vertex's pipeline is what makes it a stock to hold on to for years to come. For the next 5 years, the company plans to introduce 5 new products, each of which has a sizable market potential. These include a treatment for beta thalassemia and sickle cell disease, as well as an acute pain therapy that could take the place of opioids. In the not-too-distant future, Vertex may rank among the largest pharmaceutical companies worldwide. Number 6, J.P. Morgan Chase & Company. One of the most recognizable companies in the world's financial services sector is J.P. Morgan Chase & Company. In terms of assets, the largest bank in the U.S. has 1,200 financial institutions in its portfolio. On October 4th, before the company's Q3 2022 results, Citi's Keith Horowitz put J.P. Morgan Chase & Company stock to a positive stock watch list. The analyst set a $135 price target and a buy rating on J.P. Morgan Chase Chase & Company stock. According to Horowitz, JP Morgan Bank & Company will post higher quarterly revenue than anticipated, update its 2022 outlook, and anticipate a higher run rate in 2019. Number 5, Berkshire Hathaway Incorporated. The Omaha, Nebraska-based conglomerate Berkshire Hathaway Incorporated operates a variety of industries, including insurance, banking, and railroad services. With its investment arm, the business has also acquired a sizable position in some of the biggest corporations in the world. Warren Buffett, who oversees the business, is regarded as a master at using the value investing tenet to identify the finest long-term stocks. On September 21st, Edward Jones analyst James Shanahan changed the stock rating of Berkshire Hathaway Incorporated from hold to buy. Operating cash flow for Berkshire Hathaway Incorporated increased from $32.64 billion to $39.41 billion between 2016 and 2021 at a compound annual growth rate, CAGR, of 3.8%. Now the stock is trading at 1.5 times book value and 2.6 times revenue. Analysts believe Berkshire Hathaway Incorporated should be trading at more than twice its present share price if these considerations are taken into account. Due to development in its manufacturing and energy industries, Berkshire is anticipated to increase its yearly sales by 10% each year over the following 5 years. Number 4, Truist Finance. According to size, Truist Financial is among the top 10 banks in the U.S. They operate in a favorable position because they are the largest of the big regional banks, but not one of the big 4 highly regulated banks. The southeast region of the country, which has one of the best growth demographics in the nation, is the region that the bank primarily services. The bank also offers retail banking, small business banking, corporate banking, insurance, and wealth management, making it quite diverse. Number 3, HDFC Bank. The biggest private bank in India is HDFC Bank. Since its founding in 1994, it has grown to have over 5,000 outlets across India as well as a thriving internet business. This year marks its 25th anniversary. India is on track to surpass China as the most populous nation in the world while maintaining a very low but increasing per capita income. It is a sizable emerging market with one of the greatest GDP growth rates globally, and by the 2030s it will likely rank among the largest economies on the planet. The NYSE offers HDFC shares at an ADR with the symbol HDB. How quickly its earnings are increasing in comparison to major American bank like JP Morgan Chase can be seen below using data going back to when it first entered the public markets. Number 2, Partners in Enterprise Products. One of the biggest midstream businesses in North America is Enterprise Products Partners, LP, EPD. They run a vast pipeline network that carries petrochemicals, gas, refined products, and oil. Although there are sporadic occurrences, pipelines are safer and more affordable than their primary alternative, which is by freight train. For delivering a variety of liquids and gases, they play a significant part in the expanding U.S. market for liquefied natural gas. Enterprise makes money mostly through shipping petrochemicals, processed goods, and energy. Therefore, they have limited direct exposure to commodity prices. Low energy prices over an extended period of time, however, can cause production levels to decline, which eventually results in reduced volumes and lesser revenue for carriers like Enterprise. The fact that Enterprise is so diversified is one of my favorite things about them. Their exposure to petrochemicals and processed goods makes them more than just an oil and gas play, giving them strong growth that is future-proof and resistance to fluctuations in market conditions. Number 1, Brookfield Company, BN. You may or may not be familiar with Canadian financial company Brookfield Corporation, BN. Real assets, including real estate, infrastructure, and renewable energy, are its areas of expertise as an asset manager. Their history dates back more than a century when the business was a pioneer in the development and management of Brazilian infrastructure. With more than $700 billion in assets under management, they have grown significantly over the last 20 years to become a worldwide asset manager. Across 5 continents, they own a variety of properties, including as gas pipelines, toll highways, data centers, solar farms, hydropower dams, and skyscrapers. They generate revenue in 3 ways as a private equity firm. They start by investing their money in a range of real assets. Second, they raise funds from institutional investors, invest those funds on their behalf in a range of real assets, and then take management and performance fees out of those investments. Finally, they created the aforementioned publicly traded partnerships and own sizable holdings in them from which they receive cash distributions, management fees, and performance fees. With this structure, they are able to benefit from both their highly profitable direct investments and the significant trend of rising institutional allocations into alternative assets such as private equity, real estate, infrastructure, and other high-performing low-liquidity investments. Private funds managed by Brookfield have routinely outperformed benchmarks like the S&P 500. So what do you think about our video? Let us know in the comment box below, and please like this video and subscribe to the channel for future updates.